Hello everyone, today is Friday, July 8th, 2022. My name is Evan. Welcome back to another edition of Stock Market Weekly, episode 639, presented by the Trade Risk, where it is my job to break down the most important trends, price action, and noteworthy moves across financial markets to keep you on top of the action. If you're brand new to this video series, welcome. Thanks for being here. Here's how the next 20 minutes or so works. We break up our analysis into two parts. So in part one, which we're about to get right into, we're going to be picking apart everything that stands out, looks different, interesting, or notable. And then in part two, we're going to jump into the charts. We're going to look at some trends. We're going to break down price action and levels of interest a little bit closer and try and best position ourselves looking ahead. So hopefully that sounds good to you. Let's jump into some of the takeaways, some of the headlines, some of the talking points in this week's video. So first and foremost, volatility cuts both ways. We saw stocks rebounding sharply on a short week. So we had a four-day work week, and stocks recovered pretty much all, if not more, some a little bit less than last week's losses. So we're going to talk about that. We got some interesting price action to look at. We see interest rates starting to creep back up. That's a negative. So, the first thing here, stocks rebounding, obviously from a price perspective, that's good, that's healthy, that's what you want to see if you're bullish. And the interest rates kind of sliding back up, that's not so much what you want to see. We're going to talk about that in part two. We see gold getting significantly oversold. We get some interesting measures we're going to look at there. We do see that biotech leadership. We talked about biotech last week as emerging as a leader and a relative strength leader, and we saw more follow through there, very strong continuation for biotech. We've got some fresh smart trend filter signals we're going to look at, and we've got some interesting observations from the ARKK ETF that we're going to be getting into in the second half of this video as well. All right, let's get into it. Wrong direction. All right, let's start it off with performance. So it was a short week out there, but you can see on the 1 week numbers here, things were very constructive for particularly the U.S. markets. We did see a little bit of lag going on there in world stocks. We saw a down week, or pretty much a flat week. But if we're in the U.S. markets here, we saw the S&P up 2%, Nasdaq up 4.6%, and the Russell up 2.4%. That's a good showing. Notice we are still down on the month, down on the past year, but baby steps here as the market continues, or at least attempts to stabilize in a bit of a sideways range. We see the trends that we've been observing here. So we're looking at a very simple version of the 10 SMA, 50 SMA, 200 SMA. So basically we've got primary and long down trends that are still in place, but we still have a rising short-term trend that is up. So the 10 period simple moving average, that is still rising up and to the right. We do have price above that simple moving average in most of these cases here, except for maybe ACWX might be right around it. If I look quickly, yeah, it's pretty close to it, but otherwise you can see those short-term bulls trying to get a little bit of a step on here and continuation on this bounce. Now, the volatility environment remains elevated, but coming down. It's at the bottom end now of its range. So we're looking at the S&P vol denoted by the VIX. We're looking at the Nasdaq vol denoted by VXN. And you can see that the VIX is now under 25 here. So under 25 is sort of where, we've seen the kind of the bottom end of the range, let's call it, over the past handful of weeks, months. We're going to look at that a little bit later in the video as well. And so that is constructive to see that volatility continues to sort of trickle lower here. Nasdaq volatility has been in the 30s for quite some time here. It would be very nice to see that crack below 30 in the coming weeks. That would be a nice bullish development there. Not sure it gets there, but we're going to keep an open look and mind about it. This is what is still, kind of waiting to turn here. So if we're looking at the NYSE 52-week highs and lows, so this is specifically looking at the 52-week highs minus the lows over a 30-day sort of in aggregate look back here. And so this trend is clearly still down and to the right. That is a bearish signal here for the market. And I consider this to be more of an intermediate term measure of market health or sort of participation. Notice we are starting to maybe flatline just a little bit. And what we sort of saw here was, you know, some of the tech plays and some of the risk growth assets are finally off their 52-week lows, but now we've got a new set of stocks that are towards their 52-week lows. It's more of the sort of real, inflation-driven sort of sectors of the market, and they're starting to now put some pressure on these lows. So we saw some pretty good rotation. In fact, you know, you might look at that as sort of healthy rotation in the sense that some of the more risky appetite sectors of the market are finally off of their lows, but in aggregate here, we still want to see this kind of, you know, start to move sideways and then ultimately start trending higher to get some more confidence that there is a more meaningful low getting put into this market. Now, if we make our way over to sector performance here, you can see it was a very split week. So we had on the index level some strong participation, but when we get down to the sector participation, you can see things were much more divided. So we saw consumer discretionary, technology, and communication services. They were really sort of carrying everything this week. So that was up 4.5%, 4.3%, and 3.4%. So if you had capital or if you had investments trading positions on in this space here, you obviously had a great week. However, if you were in the more defensive areas of the market or even energy, which continues to, you know, kind of struggle here over the past few weeks, down 22% now over the past month, or materials, then you felt some pressure this week. So we definitely had a little bit of rotation, a little more of a leap or grab for risk assets this week. Specifically, you can see in here by the sector performance. You can see over the past month here, still not many things on the green side here. It's basically consumer staples and healthcare, so a very defensive sort of disposition there. And you can see even with the 4 and 4.5% rallies in these top three sectors, you can see they're still down over the past 21 trading days. Now, if we take a look at correlations here, a couple of things that I would like to see start to happen, and this would give more clues and context that a more meaningful or robust sort of low is getting put in, is some of these correlations start to break down. Because when I see a lot of bright green and bright red on this chart, that suggests to me that we're being in a very sort of risk on, risk off mode where everything gets sold indiscriminately or everything gets bought indiscriminately when we're in that high VIX, high volatility regime. And we're starting to actually see some of the correlations loosen up here. Now, we're only looking at 10-day correlations, so this is very, very short term, but we're starting to see at least, the gold, silver, the dollar, the 10-year yield start to diverge or start to break down their grip, their hold on what, equity indices are doing, for instance. You can see all of the equity indices are still extremely correlated to one another. I would expect that to, or at least ideally, start to break down a little bit. But generally speaking here, less color is kind of a good thing in my eyes right now, just because we would start to see the market and we'd start to see, really the participants actually come to, pick apart sectors or areas of the market that are interesting, not necessarily just a blanket risk on, risk off sort of space or days. Now, this is the negative part here because we see Treasury yields just back on the rise. And, we had basically the inverse scenario happen last week. We saw yields pull back pretty aggressively, but we also had stocks, equity markets pulling back aggressively. And so now we've got yields rising this week aggressively, and we have equity markets rising aggressively, let's call it. So something, sort of has to give here. Ultimately, we would like, if we're bullish on this market, to see yields taper off and cool off and go sideways. We've been talking about that for weeks. And, we're not making new highs anymore. That's good. So let's hope that is the case. If you are bullish on this market, you want to essentially see, some of these maturities here, particularly the 10 years, I think what most people are really eyeing on. We want to see that ideally stay below 3%. And we're back over the 3% mark this week. We're at 3.1. So let's keep an eye on it. Not the greatest showing here this week. Last here, we'll wrap with the dollar and commodities. So top of the list here is Bitcoin. That is, again, a new sort of change here. We're starting to see a little bit of a rally take place here. Bitcoin's been really beaten up pretty aggressively over the past 2 months or so. So we're starting to see a move back over 20, sitting around 21, 22K at the time of recording this. We saw natural gas rebound. We saw the DBA agriculture ETF rebound, and we saw the dollar just continue to surge and moon through the roof as it makes new multi-year highs here. So the dollar is something we're going to talk about in the second half of this video. Silver, gold, crude oil, all those down this week. I'd say gold is certainly the most significant in terms of its move. 3.5% is a big move for that yellow rock, and we're going to talk more about that. We got some insights to share in the second half of this video. So that's about it in terms of the data set. If we look at our positioning here, it's very quiet in terms of our trading systems, our quant, our fully rules-based trading systems. So our longer-term system hit some profit targets, got stopped out of a couple of things, and put on a new position. I believe just one this week. So it is still basically 80-90% cash. So there's not a whole lot of change there. That makes sense. This is a longer term system. It's not going to pick the bottom. That's not what it's designed to do. It's going to look for more confirmation. It's going to look for more stabilization. Obviously, this week is a good thing. The fact that prices are moving up, it's not the only thing it's looking at, but it's, a start. So right now it's still, just barely got a little bit exposed. And our short term system here is still, pretty heavy cash as well. I mean, it's a little bit leaning on the short side here. It's got 3 positions on, 26% on the short side. So it's trying to pick its spots, trying to be tactical, it's trying to move both long and short in this type of market environment, which is, frankly, what you sort of need is to be very agile right now if you are going to be, putting capital to work. So that's the positioning. We've got a lot more info on our website about these two trading systems. So if you need some help navigating these markets, they're both very different in their methodology and how they trade. So see if one is a good fit for you. Take the dollar trial and you can learn a lot more about them. So with that, we'll be back in just a minute here with part 2. All right, let's get into it here. We've got TC2000 open, and we're going to take a look here at our equity market grid, looking at our trade risk smart trend filter. So this is an indicator. These dots that you see here, these multicolored dots, they measure price and volume across time, and they help us determine trend and trend strength based on both the buying pressure of volume and the price action itself. And we're looking at a daily chart here of all of the equity indices. And what I want to point out here is the fresh buy signals we're seeing in every market, every US market this week. And if we look at Nasdaq, it happened actually last week. But for instance, if we take a closer look here, you can see the green dot we got printed on Friday. That is price holding above our smart trend filter indicator. Notice 2 weeks ago, we had a similar price level here. So we had the S&P 500 up around 3,900. Notice that we could not clear over this yellow, our yellow smart trend filter indicator. So it's still, sort of just measured price indecision at this point. Ultimately, it failed. We got a bearish signal again, and then it got over it late in this week and then is holding over it and is starting to turn green. So this is a more positive potential signal here. You can look back to June. And you can see when we had the June rally in the market, we did get a couple of prints. It didn't last a whole, great deal amount of time. We did manage to kind of chop sideways there, and then we ultimately, cascaded and broke lower. So this here was a very short-lived signal, but it's been a while. We have to go, prior to that, all the way back to the March, April, aggressive rebound we saw in the market. Otherwise, it's been a pretty lonely road down in terms of selling signals. Basically, same rules apply here. Very similar. The days are off by plus or minus 1 or 2, but for the Nasdaq we essentially printed a fresh buy signal here on Thursday, held it on Friday, and managed to just eke out marginal gain. And so again, similar comments. This was previously up in June, and prior to that was in April. Last but not least, Russell 2000, the bottom left, a fresh buy signal as well. So this here is a bit encouraging from, again, a price volume perspective over time and who has control over this market. Again, in the short term, this is a daily time frame. If we go to our longer term time frames, when we're looking back multiple months, you can see we are still in a primary downtrend on the longer term basis, no matter how you slice it. So this takeaway here is, if you're more active, if you're more agile, if you're a shorter term trader, you're seeing more of the cross currents start to, move in the bull favor, but longer term, we are still in those lower lows, lower highs. So that's first off. Second off, let's jump into some price action here. And we've been talking about a couple of these levels. And first and foremost, I want to just, kind of switch over to this view and also just note, actually, let's just clean it up. Let's just note the headache that the market has been in here over the past 3 weeks, or really the past 4 weeks. I mean, this has been some violent alternating up and down markets. We were down 5.8% on June 17th. We then rallied 6.5% on June 24th. We then fell, but also had, almost a 5% week, but managed to close down only 2.2%. And now here we are, up 2%, but again, a big range on the week. So we are really seeing some volatility express itself in this sideways range. Let's go back to this view here. And this is, again, kind of the roadmap we've been using with these big key sort of horizontal levels of support and resistance that we've had drawn here. And when we look at what the market is doing, it is now back above this 3850 zone, which was basically the May lows. I like to keep things simple. I like to use past reference points, past previous pivot points here. Let's go down to a daily chart. And so when we were in May and we made the lows around this 3850 zone and we tested them twice and then we held up and we got that nice bounce and then we ultimately rolled over, these are key points here. These are key emotional sort of points where buyers were taking place, people were noting price action and taking note of where this was all occurring. And so when we break below a certain level, this is where, we get a lot more pessimistic. Our outlook is sort of default bearish when we're sitting below previous supply and a previous what we would expect to be resistance. But when we start to reclaim these levels, we get a little more hopeful, right? And so that was the thought process here. When we did our video back a couple weeks ago, we started to get back above the May lows. And we basically said, look, this is a good start. It's up 5 days in a row. This is healthy. Nice to see it back over this May level, but we need to see it hold above the May level. And then what ultimately happened was a bunch of volatility that got us back below. We broke below this key support area. And then we chopped sideways here. This was 3 days this week, or really tail end of last week and this week, that we basically, moved sideways in a very kind of challenging spot here. And one of the things we sort of discussed last Friday when we recognized the loss of the May lows was that the best case the bulls could go for now would be some type of higher low over these lows here, right? So the fact of not coming all the way back down to retest this, that was the optimistic scenario, was we need to put in some type of higher low, get back over the May lows, get back over 3,900, and ultimately, we're going to want to see this market take out the highs here from just a couple of weeks ago. So you can see that that's sort of what happened this week. We did get that higher low. We are now back up into resistance. We're back above the May lows, but we're just, kind of dancing around here in this 3,900 range, and we're waiting to see what's going to happen. So we've got a bunch of catalysts coming up. We've got a big Fed meeting where we're going to get probably a 75 basis point rate hike. That's not this week. Is it this week or is it next? I think it's 2 weeks. So we got that coming up on the horizon. The market's going to start to price that in and, kind of figure out, where we stand there. We also have earnings season. That's going to be coming pretty quick here as well. So we're going to have a whole nother round and slew of earnings announcements and numbers and guidance coming out. And that's going to be influential for this market as well. So in terms of headlines and catalysts, you can expect that on the horizon. In terms of price action here, you can see that, this is what this is, stabilization in process. Basically, it's choppy, it's messy. We're seeing violent moves. This is not an easy market to navigate, so you got to be careful here. But we do see, the ingredients for a potential higher low. We're going to need to see how we resolve ourselves going into next week. We do have, the MACD trying to, push back up into positive territory. We're back above those May lows, so let's kind of see how this all, shakes out next week. We did talk about seasonality. Seasonality last week. That was something we looked at in a couple of different studies. This is a very bullish time seasonally for the market. And so, this week, clearly we're seeing that seasonality kind of kick in. We're starting the third quarter as well, second half of the year. So we're starting to see maybe some of those flows kick in as well. So let's keep all of that in mind. If we look at the Nasdaq 100, you can see basically similar things here. We, did our video. We said, this is unfortunate that we lost the May lows, the 286 zone here in the Qs. We danced around for a few days. We had this nice igniting bar on Tuesday of this week, and then we basically have been up now 5 days in a row for the Nasdaq 100, and we are much closer, in fact, closing above the highs that we made on the 27th here. So the Nasdaq is trying to take the lead, trying to shape up a little bit better. It is above the May lows. It's back in this range here, and it does have this gap right in here, which it hasn't quite filled just yet. So the gap from, let's see, this would be the gap from the 10th, June 10th. It's about 1.5%, 1.25% above us, right around 299. So we can see if we can get that filled. Ultimately, if we can continue to hold these May lows in the SPY and the Qs, then I wouldn't be surprised to see the market kind of work itself back up into the upper end of this range here. So that is, the ideal scenario for the bulls right now, is to just kind of, float higher here, bullish time seasonality wise. Maybe the market is going to start to position itself for earnings and for the Fed conversation to happen. And we can see if we can get a little more follow through on the upside. Last but not least is the Russell 2000, and basically here, put in its higher low, or is in the process of it. Technically, by the book, I don't think you can classify anything as a higher low until it in fact confirms and sort of takes out the previous swing high. But basically here you got buyers kind of showing up, reclaiming the May lows and trying to work themselves up back into this old range. So very similar comments. MACD is kind of racing higher, and that's really the scenario all around. Now, I actually want to jump to, before we look at some of the other major markets here, I want to jump to ARK. I posted this chart on Twitter a few days ago and sort of highlighted the divergence, or the positive divergence, the leadership here, relative strength that has emerged for ARK. Basically, the May lows back here in ARK were basically around 35 and change. And on the June low, on the June sell-off in the market, we didn't actually pierce below or make new lows in ARK. So we saw effectively a higher low, a double bottom, depends on how you want to call it, but we held the May lows while many indices, in fact, kind of continued to roll over. And then most recently here, we made just a slightly, more pivot upper level here. So another sort of slight higher low. And you can now see that we are in the process of actually taking out the June highs, the May highs, and effectively making 2-month highs here for ARK. Now, I like to use ARK as sort of the poster child for growth and risk appetite on the growth spectrum. This is Cathie Wood's flagship ETF. It's what everybody piled into and had just this epic run up off of the bottom through COVID. It was up from the lows of COVID all the way to its highs, up 360% in like 8 months or 7 months. Very unheard of amounts of flows and capital in there. And then it was one of the first to peak out. Well, I guess it wasn't the first. It certainly was the first, in fact, because this was back in January of 2021. Is when it sort of ultimately topped out, went sideways here, and then it started to really roll over with everything else in November of 2021, and that's what's cascaded it 78% down, and been in a brutal sort of downtrend here, giving back all of those gains. So it was one of the first to top out. It's looking like it's going to be one of the first to sort of potentially bottom out here, and it is trying to lead to the upside. So this is interesting. You get the MACD back in positive territory. This to me is, I'm going to, again, keeping things very simple with just previous supply and resistance levels here, 2-month highs and this resistance up here. I would say, and this was the comment on Twitter, was don't fade the growth trade if ARK is above $46. And that's basically just a very simple heuristic saying, if this is, starting to break out, if this is in fact accumulation here, and we are starting to turn a corner, then I would not be fading growth so soon, because there could be some legs behind this trade. Now, again, it's premature, it's early. We're gonna continue to measure and monitor it. It doesn't mean you need to throw risk management out the window, but basically here, if this is going to break out and lead, then let's just pay attention to it and let's try and ride ride that wave if we can. I think if you look at the monthly chart, you start to see just how brutally beat up this is, right? This is a nasty, nasty chart. It is severely oversold on lots of different metrics. And the fact that we are now trying to just go up for the first month after 7, and we're finally starting to take out the previous month's highs, that is, again, at least interesting here for a trade, right? Not calling a big bottom in ARK doesn't mean it can't go lower later in the year, but, you know, even a move back up into the mid to upper 50s is still going to be, you know, 20% from here, and would only get you back to where we were 2 months ago or 3 months ago or 4 months ago. So that's something I'm looking at there. I think growth is certainly in favor right now. Keep an eye on ARK. If this starts to violently reject here, if this starts to just, you know, cascade lower and just lose this level next week or the week after, then all bets are off. I get a lot less enthusiastic about this trade. But for me, you know, sort of looking at this here, it's a nice display of relative strength. So that was one of the key themes for today. Let's talk about the VIX. So we mentioned the VIX at the top of the video. It's back below 25. This is, you know, kind of where it's been catching a bid, right? So in the June levels, this is about as low as it got. It got around 20, upper 23s, 24. And so we're almost back there. And so we're going to see how it reacts down here, but definitely we're starting to see that cool off a little bit. If it can stay down here, that's good. But if it just gets a ripper off of that level, then, you know, clearly that's going to be a tough thing for the market if that starts to happen. We can take a look at oil, which had a very aggressive sort of rebound this week. I mean, this was shaping up for a very disastrous week when it was basically at one point down 12-13%, but you can see the big tail down here, the high volume wick and reversal. And if we look at the daily chart here, you can see it basically got all the way down to the March-April lows, this bottom end of this consolidation, and then it rebounded pretty aggressively. So jury's still out here. There's definitely a lot of volatility and sort of cross currents going on, but there was a pretty good rebound there in the USO. Gold didn't quite get that rebound. So if we take a look at gold here, and we look at this weekly chart, so 3.6% move lower for GLD. It's the 4th week down in a row. If we take a big zoom out here, you can see that we are now back to multi-month lows. So this is, or really multi-year lows, in fact, in the lower 160s here. So throughout 2021, we've basically been moving sideways, finding support around 159, 160, and we're nearly there once again. And if we look at this monthly chart, you can also notice that we're basically down 4 months in a row. And last but not least, in terms of, you know, oversold signals here, let's throw on some Bollinger Bands. Let's look at a weekly chart and then take a look at this on the weekly 2 and 20 Bollinger Band. We're starting to drop below it, you know, pretty meaningfully. And GLD is traditionally, you know, again, doesn't like to stay too far below these levels before it gets some type of snapback or stabilization. So GLD, if you're bullish, coming back into support, down 4 months in a row, down 4 weeks in a row, below the weekly Bollinger Band, something to pay attention to. I have no position here myself. It's also below the daily Bollinger Band, but something you can certainly keep an eye on here for perhaps even just a tactical trade or something longer. So gold, I think, is quite interesting, just given its move. Last but not least, let's look at treasuries here. So let's take a look at IEF. IEF, take off the Bollinger Bands here. So this is the 10-year treasury bond. You can see it had a very nice move off of the lows here. It's up 6% in basically 2 weeks, 3 weeks worth of trading. And it saw a pretty sharp, aggressive move lower this week. Volume dried up a little bit, but still, you know, we gave back a lot of last week's progress. IEF here is going to be important to just see this thing bottom out. Again, we talked at the beginning of the video, would love to see the 10-year yield stay below, call it 3%. I think that's just a nice magic round number at this point. I think that would keep the equity markets comfortable or happy. Let's call it happy. The Nasdaq growth stocks would like to see that stabilization there. If IEF just continues to spill over, if we see a continuation week lower next week, I don't think we're going to get a sustained equity market if this continues to make a lot of noise. So let's keep a close eye on that. Some counter progress here this week. So that's it. I think that is everything. I'm looking at my notes, my checklist here. ARK. Oh yeah, Biotech. So we talked about Biotech last week. This was our leading idea here, or basically the big leadership name to pay attention to. And, you know, this was the week it put in 5.4 to the upside. It was basically the best performing sector this week. It broke over the May lows here. It broke above the March lows as well. I'm sorry, the May highs, the March lows. And this is, this is sort of the setup that we just described in ARK. IBB and Biotech seemed to just get this a week earlier. And we called that out last week, had a great week this week. So congrats to those who played it. It's, now up pretty significantly over, 15, 16 trading days. So it's got to be a little bit cautious now, going for the chase here, but still lots of strength out of Biotech. So great to see. Congrats to those who may have taken that. So last but not least, let's just take a quick look at our industry scans. Not a whole lot to look at this week. On the upside, Biotech. So front and center, just Biotech straight up. We saw footwear and accessories seeing a high volume turnaround. We see healthcare plans breaking out to new highs, health information services moving higher. We got solar, which is popping back up here, starting to clear above multi-month highs. That's something interesting. And then we just have the IBB again on the upside. On the downside, we've only got two sectors here, both consumer defensive. So we got beverages breaking to new lows here. And then we got tobacco breaking also to new multi-month lows. So definitely some relative underperformance there. So that's it. That's what I got for this week's video. Lots going on, lots to pay attention to, but hopefully this was helpful. Hopefully you enjoyed this video. Let me know below, leave a comment if you like the video, and let me know what you're watching this weekend. What's got your attention? Do you believe in this rally? What do you think about the ARK trade? Let me know below. Love to hear from you. And as always, I want to thank you for tuning in every Friday, long form analysis just like this. Subscribe on YouTube or follow us at thetraderist.com. Have a great weekend, and we'll see you back here next week.